Biggest challenge for scalpers is seeing price movement as price action. And those are two totally different things.
Do you feel like scalping is difficult to learn?
That's interesting.
Welcome back to Be the Trader, everyone. Today's gonna be a great day because we're here in New York City and I'm here with my man Jeff, who's been trading here for 6 years, and he also helps developing traders. So Jeff, welcome back to the show, my man.
Thanks for having me on.
Absolutely. So I really want to dive straight into the whole scalping world. Because I know that's something that you definitely help traders on as well. Do you feel like scalping is difficult to learn?
That's interesting. It depends on what type of scalping you're talking about, right? So when we're bringing a trader up or when we're teaching any sort of strategy, a lot of times people will look at the tape and think scalping is reading the tape and trading the price movement based on the tape.
Yep.
There are traders who do that exceptionally well at our firm. Most traders don't. Most traders are much more pattern recognition, which is when we talk about scalping on the desk, most of the time we're actually talking about pattern recognition. So specific price action setups that occur on very short time periods. And those kind of come together. And the thing that we like about it is we find a reason for those patterns to exist and then play out the way they're supposed to. So it's not like trading the price movement because it's moving. It's actually understanding the fundamental reason why that movement should occur, and then looking for specific risk reward opportunities within that price action pattern or setup that's occurring. And so when we talk about scalping, I think it gets thrown this general term and everybody thinks you're banging the keys all day.
Yep.
And really what's happening, the process of scalping and the process of developing traders on our desk is much more focused on identifying a lot of potential ideas and then trading only a few of those. Because those few are really doing exactly what they're supposed to do. All the other ones are kind of just price action moving around, and especially for developing traders, they love to just kind of see something moving and it's like, oh yeah, that's it, right? Oh yeah, that's it. But like if you have a really systematic process of this is why that trade exists, you can look at something, and actually almost all experienced traders will look at a lot of things and they'll say that's not it most of the time.
Now, what do you mean by, because you mentioned pattern recognition, but then you just mentioned like, can you elaborate a little bit more on that idea?
Yeah.
Because I'm just a little confused.
Yeah. So, and that's part of what we really had to dive deep in. So I'm glad you talked about that. So like when we talk about pattern recognition, right? You can look at the candles and you can say, I recognize this price action pattern.
Okay.
Well, the very next question that we're going to have is why does that price action pattern exist? Right? So we'll take something we call like the hitchhiker scalp, right? Okay. It's a pattern that occurs right off the open. It happened in AMD today, right? There was buying pressure right off the open. And then what usually happens right after the open? Like if there's a quick up move, what normally happens?
You have like a reversal move.
Correct. That's what normally should happen. But if you have a big buyer behind that, that's causing that up move, that's going to sustain it, what's the price action going to look like? It's going to sit there and it's going to be holding up, right? So you'll have that natural seller, but then you'll have the buyer there. Well, that's a big player that's usually entering an order that's going to take a period of time for them to enter the entire order. So if it's holding up, that's just telling you there's actually a big player here, and you recognize the pattern of that, but you understand the reason why. If you understand the reason why, then you can set your stop appropriately, because you know if they actually drop, that trade's probably over. But more importantly, you can also understand what should happen next. If that's a big buyer, are they going to just like blow it up and it's going to be one move and then it's going to fail? No, it's going to be this sustained buying pressure. So you get multiple waves as it kind of goes up, and then the buyer come in, then goes up again, and then it kind of fizzles out after a period of time. What usually happens in that entire circumstance is some big fund or whoever it was called their execution desk, and they said, we need to be in X number of shares, call me back when you're done with that order. Well, they're going to call them back at 11 o'clock when that order is done and say, we got you filled, right?
Yeah.
So that creates that entire trade. And so over the last probably 3 years, we've thought about all these different scenarios that we see in the market all the time. And then we've tried to kind of figure out what's the context that actually drives that. And then we've layered on the patterns that occur because of that context, right? Because of that reason. And then we've created risk and reward opportunities off of that. And then most importantly, set an expectation of, based on what we see, what do we think is likely to happen? And it gives you the flexibility to take the trade initially, but then also exit the trade if you don't see what should happen happening, right? Like you just know this doesn't feel right. So essentially you're systematically eliminating anything that is a B or C trade just with your filtering process alone.
And then now you mentioned the idea of AMD and how it's pushing up with a big buyer behind it. And initially I wasn't thinking about patterns in that way, but I was considering, I'm sure other traders were listening to this, were thinking patterns of like ascending triangle, like multi-day breakouts, like those type of patterns.
Yep.
Is that also something you guys look at too as a scalp? Okay.
That's a huge component in the probability of a scalp working, right? Because you're talking about what we call a setup, right? So a multi-day breakout, like that's a setup that's occurring, right? That's not really a trade in and of itself. You can trade that setup, but it's not really a trade. Where do you put your stop? What do you expect to have happen? All of those are variables that are really tough to define. Mm-hmm. But if you take the right scalp in the right setup, it's got this insane probability of working because you're recognizing this component fits with this component. That makes sense.
It's like finding the big picture setup, combining it with the intraday pattern equals a better high odds play.
Yeah, you're increasing your probability, but then you still have to layer on the risk to reward, right? Yes. You still don't have the risk to reward. And so the EV equation is something a lot of people focus on the probability or they focus on the risk to reward. You have to have both. And especially
Can you explain why? Like, explain that.
Yeah, quick. So if you have really high probability but horrible risk reward, you might win 80-90% of the time. But then those times that you lose, you could wipe out your entire account. And we've seen traders come in and talk about how great they are. And you were talking with Max earlier. He's saying like 40 to 50% is like pretty good actually. Like that's like about normal on our desk. That means you have to control your risk because otherwise your P&L is going to go in the wrong direction. But more importantly, you want to find those moments where everything is stacked in your favor, right? So you have high probability plus really good risk reward. And those don't exist all the time. So you really want to break down when those exist and then study why those exist. And so we used to train all of our traders, as when they would first come onto our desk, we train them in all these different ways and say, here, go figure it out, and
which way vibes with you?
Yeah, which way vibes with you. And we recognize that's just too early in their development to be able to say, you tell us what works for you. And the reality is most traders should develop, at least on our desk, we believe, they should start by scalping these very distinct, discrete moments of opportunity. Because only if you're trading the right way with edge are you going to actually be able to work on your psychology. Otherwise, your psychology is going to be way all over the place because you don't really know where your edge is coming from and you can't really push anything. So you don't really know when to go and when to hold back.
Right.
So you need to start with this edge and then you have to develop kind of your psychology because you're trading something with edge.
I'm curious because let's just stay on this topic here of the whole idea of like, let's say you have a pattern with the setup combined, right? But there's discretion there, right? And I talk about this with Max as well, but I want to talk with you as well. And that is, let's just keep it simple. Let's just say, even if you don't trade this, it's fine, but an ascending triangle. It's just simple. Most people on the show will understand that. How do you prevent traders from forcing themselves seeing that and waiting for it to appear? Does that make sense? Because that discretion part can really, to try to make that part systematic is very difficult. So I'm very curious on how y'all do that or how y'all at least analyze the behavior of when they trade it. Like, are y'all a little loose on that part? Just curious.
Yeah, and I think what I hear you asking is much more, how do you step away when you know it's not right?
Sure.
Is that correct?
That's another way. It's just like if we had if you showed me
if we drew 20 of them.
If I drew, and then like, how do you know which one's the better one?
Correct.
Right? There you go.
Yeah, and so that's more importantly, we're asking ourselves the question, especially for new and developing traders, how do you not get sucked in? Right?
Yes.
The experienced traders focus on what's the better one, what's the best one. I need to scale up the best one, right? But if you don't really know where your edge is coming from, you don't really know where the best one is. And so more often than not, we're focusing on how do you not take the ones that are prone to failure. And it's this weird shift that occurs because if you start by doing that, you develop really good habits. Because you're stepping away from trades that aren't working. You're recognizing this doesn't feel right. And then even if it works, you're like a little more confident in, I knew that I didn't take that trade because of X, Y, or Z. Right? So we're asking ourselves the question, when do you really not take that trade? Much more than what are the times that I really need to take this trade?
So
that's an important component, but especially later on in your development, right?
In other words, it's like you want to be forced, like, right? Like they're trying to disqualify everything.
Correct.
So and then when they can't, it's qualified.
Yeah, exactly. And the way that we talk about in this room a lot is when somebody's making a trade that just makes sense to them, it's literally your job to put on the risk at that point. Most of the time, your job is to determine that it's not a point to put on the risk. But those times that just everything lines up, you feel it, your trade feels different, everything looks different.
And you know.
You know.
Yeah, you know.
And it's like, if you can trade in those moments more often, your entire trading psychology and everything starts going in your favor. Yep. And that's how you can develop faster as a trader. It's not, you don't develop faster as a trader by losing more and then I'm so tough I can make it back and everything. Yeah. This is not what we've seen on the desk. But what we have seen is the people that do the little things very well. You recognize this pattern, you recognize the variables, you see the setup, you see the trade, and then you execute. All of a sudden you can start working your psychology a lot more. You'll still lose. You'll still lose half the time. But you understand, okay, this is something that I can accept that loss.
Someone asked me, what's the most important thing you want in a broker? And I said, great customer service, fast execution, a large number of locates for hard to borrow stocks, low prices on locates, reasonable commission, and rebates on routing. And that's why I use Cobra Trading every single day. They excel at everything that's important to me. Sign up now by using the link below, and Cobra Trading will give you 1 free month of software and 33% off commission for life. So what are you waiting for? Work with the best just like I do and click the link below.
Toughest thing is when you don't really know why you lost to have to accept that loss, right?
Yes, 100%. And what's even tougher, and I'm curious if y'all run into this, because you guys, you're in a unique position where you're dealing with traders every single day. And the traders who come in, they're surrounded by traders every single day. Yeah. So it's very unique. A lot of retail traders don't get that opportunity to talk with real traders on a regular basis. So how do you guys handle, and does this come up? I know it comes up by yourself, but I wonder if it comes up in this environment where they know the setup, they press the buy button, but they second guess. Yeah. And then they move their stop too soon, take a loss when they should have never moved their stop. It didn't break structure, nothing, whatever their rules are, maybe it's structure-based movement or whatever. They didn't do it, right? Yeah. They just cut they make a loss, a winning trade into a loser.
Winning trade into a loser,
right?
Or don't make enough in the winning trade when it was the right one.
Sure, but not.
You mean turn the winning trade into a loser?
I mean, like they enter a trade, they already have their plan ironed out, but then they start to second guess themselves, so they move their stop to whatever, and they take an unnecessary loss when it never really would have hit their original stop. Gotcha. Like how do you deal with it? Does that even come up here? Yeah. At the beginning of the career?
It comes up every freaking day. Okay, are you kidding me? Like, like the thing that's interesting about this place is it really is a desk full of, I think, very special people doing some very special things. Does that mean that the very special people don't make the exact same mistake? No. Yeah. But the speed in which they're making a mistake and correcting that mistake, they're recognizing exactly, I moved my stop because I saw a break in structure, if that's the case, right? Well, is that break in structure helping me or hurting me? If I'm feeling like I see this break in structure, is that helping me or is it hurting me longer term, right? And if it's hurting me, I'm gonna eliminate that as quickly as possible. So I'm going to get accountability from the people around me. I'm going to make sure that I'm calling out what I'm seeing. I'm going to write in my daily report card and email it out to my team. I made this mistake today. Like here's how I'm going to fix it, sort of thing. So it's not that people aren't making mistakes or aren't adjusting their trade or whatever, but the emotional impact of one of those things is so diminished because we just kind of view them as like, you're making a mistake. Okay, you fixed it. Now you're going to move on again. Yep. It's if you start to make that same mistake over and over that the emotional impact kind of tends to compound. Yes. And then all of a sudden you're fighting that instead of just doing what you're supposed to do, which is essentially sit in your seat and wait for a trade to fall in your lap. Speaking of that, sit in your seat and wait for a trade to fall in your lap. There's this conception, and not here, just in general, when it comes to working for a firm, that you have to be trading every second.
Would you say everyone here is different where like some people maybe will only trade maybe some days not at all?
Yeah.
Or sometimes it's very infrequent, sometimes it's every single day. Like how would you say like your expectation is, or is everyone different?
Yeah, I think when people first join our firm, they feel like they need to be pressing the keys more than they really should.
Trying to make sure they do the right thing.
Yeah.
I'm working.
Everybody has that little like voice in the back of your head, like oh man, I'm doing something.
Yeah.
What you actually see is this beautiful thing. You walk into the office in the morning, and there's, as early as you want to be, there's usually somebody here before you, right? Like, it's pretty cool actually when you walk into our office. The lights don't turn on until like 8 o'clock usually, or like sometimes a little earlier. But like you walk in and it's almost like this cool darkness to it, right?
Yeah.
And so you're walking in and it's like you start to feel the energy of different traders coming on the floor and hear a little bit of the chatter and all that stuff, right?
Yep.
But then by the time the open comes on, like especially if it's a busy day, it's pretty quiet.
Yeah, I've noticed.
And it's like really interesting because people are really focused. And you'll hear a lot of chatter on the keyboards, but it's not people entering and exiting positions and putting on a bunch of trades. It's people looking for opportunity. And so, you know, when you talked to Max earlier, you heard this, but like a lot of what we do is we might look at 50 trade ideas a day, and then we cut that in half as far as the ones we actually do any sort of analysis on, spend any mental capital on, right? So maybe I'm looking at 25 ideas, and then maybe a quarter of those are actually ones I'll even put any risk on, right? So all of a sudden I'm down to like what, 7 or 8 ideas, and like that I'm even considering putting risk on in, right? And so if you think about that over the course of the day, we're actually not doing that much. There certainly are traders who are constantly moving positions around, and a lot of times they're trading off a bigger idea, like a swing trade. They're scalping the price action intraday, they're moving their average around, they're making some adjustments, stuff like that. Those are more rare, but we do have traders like that on the desk.
Yeah.
But overall, it's surprising how much people aren't doing things. They're fully engaged in the market, ready to be there, right? But they're not.
They have a finger on the pulse.
Constantly, right? But then they're not pressing the buttons. Like you'll hear so many things called out on the desk that no one on our desk ever trades.
Interesting.
And very quickly the conversation is, we had a breaking news thing this afternoon, and it was very quickly the conversation was, okay, it's not this because of this and this and this. And it's like, okay, so all of a sudden nobody on the desk took that trade. It could have been good, it could have been bad, it doesn't really matter, but that's a part of the process that goes into not taking trades that are traps or trades that aren't really what you think they are. That filtering process is, I think, what makes our desk so special.
I'm glad you pointed all of that out just now, because a lot of people are going to understand, like, man, they're probably at home right now pressing buttons, like trying to press every minute,
I was that
they
way
have a
when
Christmas
I started.
tree, you know, on their, like they have the Christmas tree, and you know what I'm talking about if you're trading that way. It's because they have that feeling that they have to be doing something, right? And then you already said it multiple times, like either you start your traders and show them the mindset of elimination, so that way you're kind of forced for the best ones, and then eventually you shift to the other way where you're looking for the best ones. But you don't know the best ones. So
it's tough to know the best ones. It would be nice if they were all super obvious. The best ones are really obvious to anyone that's trading it. Like, you talk about some of the blow-off stuff that we just saw with some of the price action, and that's just painfully obvious. You look at the chart and you're like, yep, that's obvious. You talk about some of the technical breakouts, that is straight obvious, right?
Like anyone who's brand new to trade can see it.
You look at it, and that's, I think, what gets a lot of us into trading, right? You look at it and you're like, if everything broke out like this, I could make so much money. This would be amazing, right? And over time, you recognize that maybe that isn't the best strategy to buy every breakout and stuff like that. In certain markets, you can get away with it for a long time, but a lot of what I have had the opportunity to do is work with our team that develops traders. And one thing, if I'm good at anything, it's putting structure around what we view as an important thing, right? And so coming out of 2020, 2021, we hit like a little bit of a patch in 2022, and I think you were here right when that was happening. I think so.
Yeah, I think so. Yeah, 2 years ago.
Yeah, because we sort of had a little bit of a drawdown with traders drawing down. And one thing that we were forced to look at are, what are the businesses that we actually have edge in as a firm? And so we looked at kind of all the different trading businesses, right? Each sort of idea or
is a business,
right?
Okay.
And so we looked at all the different businesses, and it's like, are we good at M&A trading? No, we're not really any better than anybody else at M&A trading, right? Mergers and acquisitions. That's not the space we need to play, right? Are we better at price action trading? Do we have edge at price action trading? Yes, we do. Okay, so that goes into it. Let's dig a little deeper. Is speed an edge of ours? Yes, because we don't have to take a big rip if we don't need to. We can just press the key and we're out of the trade, right? So speed's an edge. So that's how we wound up with scalping. And we wound up with 7 or 8 different businesses as well. And so we have, I think, 9 that as a firm we really focus on, and then build specific, we're in the process of building specific teams around. And so that structure gives us the opportunity to come in. Everybody learns scalping when they start, because if you can scalp well, if you can train yourself to back off of those trades when they're not there, and then take the trade when it just compels you to, right? When just everything lines up, then you can go to any of those 8 other areas of trading, and you actually have something to rely on, right? You can always come back to your scalping business. So if low floats aren't running for a period of time, guess what? There's probably some scalp trades to be had somewhere. If gap trades aren't working, guess what? There's probably intraday scalp trades to be had. So most of the traders are developing a baseline through scalping and then branching out from there, going into other styles of trade. But you're just getting more reps of doing the right thing when you're starting with scalping. And so that's why we start our traders with scalping.
Would it help a trader who maybe is only swing trading right now? Like, would scalping, because they're probably out, like, why would I even learn this? Like, I look at the daily and the 4 hour all day. Why do I even need this? Would it?
I mean, you just talked with Max. That's a perfect example of this. Like, even the traders that are swing trading on our desk are looking at the scalping opportunities, because that's how they're defining their entries so well. Like, that's exactly, if you can add a little bit of edge by recognizing the price action that's going into ultimately what could become your scalp setup, you're putting yourself in such a better position.
You can have way better RR. You can have a sniper entry. Because you're looking at the intraday action.
And the thing that I think most people skip over is you're looking at the action, but you're not asking yourself, why is that action present? Like, why would somebody be acting in this way? What incentive does a big player have to act in this way? And you really have to kind of understand the dynamics. Maybe somebody thought it was a short, right? And so it started to fade down all day, and then they didn't cover, and then it starts to tick against them. Every one of us has been there, right? You're like, do I cover now? Like, I thought it was going to go way lower, and now it's kind of up a little bit. All right, let me see if I get a dip, and then if it starts to roll over again, then like it's really going to go, right? It starts to roll over again, and then it kind of gets bought up again, and you're like, you know you're wrong in that trade, right? Well, that could be, if you're thinking of it from that 4 hour chart or that daily chart, that could be the perfect entry for a swing trade long, right? Because you recognize exactly what's happening. So those components wind up feeding on each other pretty nicely.
That's really interesting. It's like, I mean, you could take that even further and put swing trading can help you become better at position trading and so forth. If you see it that way. It's like they all start to build.
That's I think Bello was smart to recognize that, and when you came, I think you were here in like June or July of 2022, probably. Like, I thought it was the summertime, and or maybe earlier in 2022. But when you were here, Bella had been in our ears for like 6 months. Steve had been in our ears for like 6 months. You guys got to scalp more. You guys got to scalp more. And I think it only took us a period of time after that to realize, like, these guys maybe know what they're talking about. But like, it was just really interesting, and because of that, we were able to create this structure and specific actual price action patterns, specific scalps that have a reason for occurring, that when we can look at the price action, we can identify the reason for why this would occur. And then we can look at, okay, because of that, this is more likely to occur, or if this fails in this way, this other trade's actually likely to occur. Like, that's something that you'll see a lot of traders do on the desk. So
how do you prevent new guys from rolling into their office and sitting at their desk, and then all of a sudden they see some headline or see a big picture setup and immediately have a bias? Like, do you want them to have a bias right away, or do you want them to more so look at the action intraday and then determine the bias?
The bias is a hard thing, and our goal for any new trader, it doesn't really make sense to us, and it doesn't really make sense to them if they're not going to be in it for 10 years, right? Like, that's when we're recruiting and we're talking with people, we're asking ourselves the question, is this person going to be a part of our desk for 10 years?
Yeah.
If the answer to that question is we think they are and we think they have what it takes to be here, sit in your seat for 10 years, you're going to have some good years, you're going to have some bad years, you're going to have some exceptional years, right? Over a 10-year period, that's what's going to happen. The first challenge in that is getting through the first 2 years. And you talk about coming in and having a bias. That can be one of the best things or one of the worst things in your first 2 years. It can be the worst thing because you come in and if you trade off your bias without the price action, you're going to be trading your bias and you're going to be fighting whatever price action's there. We have put some processes in place to kind of manage our biases. So like we score the catalyst now. So if there's any sort of catalyst, we'll talk about, is it a positive 10 or a negative 10 or somewhere in between. Most catalysts, like until we started scoring them, we didn't realize this. I think we started scoring them and everybody's like, that's a positive 8 or a negative 8. Most catalysts are actually like 5, 6, maybe 7s. Like it's very rare for us to have an 8, 9, or 10 catalyst where you're actually going to go with the direction of the trade only. You're not going to look to fade it. You're just going to go with, right? So that helps that process, and we teach that from the very beginning. But the reality is, like, that's just a little step in this entire process, and the goal is to get you to the first 2 years. If you can get to 2, you're really likely to get to 10. And how you get to 2 is simply by being consistent, right? You have to have that positive P&L. You have to be consistent, and then you have to be consistent, and then you have to be consistent again. And if you've done that, then you actually have something to build on. And without that, you're just going to be, these first 2 years are going to be up and down, and then everybody's going to hope that you kind of turn the corner on year 3. And that's not really a high probability of getting you to year 10.
What is like the biggest mistake people make when it comes to learning how to scalp?
Probably thinking every pattern is scalpable. Probably thinking, I saw this, and so I'm going to take that. But they don't delineate why that trade existed in the first place, right? If you don't have a real reason why you are going to win and all the other market participants that you're trading against are going to lose, like, you don't really have edge. You just have an idea, right? And some people go about defining that edge quantitatively. We use kind of a combination of price action and discretionary thought process, which I know seems kind of weird, but we see it over and over and over again. And like you said, we're 50 traders talking about trading all day, talking with other traders, understanding the way different market participants might think. We're really trying to develop these repeatable patterns. And so the biggest challenge for scalpers is seeing price movement as price action. And those are two totally different things. Price can move anywhere. You look at a candle and it's price movement. Price action is the combination of those candles that's actually telling the story of what's happening. So you just can't ever confuse price movement with price action.
That's a good point. I think all of y'all, everyone should rewind that and listen to that statement again. You don't confuse price movement with price action. So what would you say is the biggest reason though? Because you're bringing all these traders in and there's has to be a lot that don't make it as well, right? We've
gotten better about that, but there still are some that don't.
What would you say is the main cause? Because they're obviously checking the boxes to get in. So what is the main cause for them to not stay for those 10 years?
I can talk about when I started here, and it was really funny. So there was a class that I was in, and there were a lot of new developing traders then, right? People that hadn't traded at all, and I just happened to be in that same class. I had traded a little bit before, but whatever. These are the guys that I came up with, right? Like the people that I still love texting with because it's like you started together, right? It's really cool, right? Like anybody that starts trading and you develop a pod, it's like one of the just people that have been there since day one. Like that person. It's a lot of fun. But some of them didn't make it, right? Some of them aren't trading anymore. And a lot of times it's because they can't commit to an edge. They don't sit there and say, this is where I need to go now. They don't prioritize what they actually need to do to get better, right? And so they're trying a bunch of different things and they don't actually have edge in some of the things that they're trying. And so the things that they have edge in, they're not making enough in those, and they wind up losing about the same or even more sometimes in the things that they don't actually have edge in. So that's why we kind of took our entire training program and focused on scalping for developing traders, because you're starting with edge. the trading psychology part's pretty difficult. But if you're not starting with edge, it's immensely more difficult because you're just prone to all these other errors that you're going to make if you have edge, but you're not going to be able to really learn from them because you're prone to the fact that maybe I'm not trading with edge. So even if I fix this psychological problem, even if I need to add to my winning trades and not add to my losing trades, right? Well, like if you're taking a trade without edge, it doesn't matter if you're adding to your winners or adding to your losers. Like you just don't have edge in that trade. So it's like really cementing, you're going to start here and then you're going to grow into all these different avenues. By doing that, we've improved the retention, right? So like that's a big thing here. We invest a lot in everybody that comes through the door as a firm. Like I feel so lucky to be, the firm invested in me, the technology, the pods that we have, the other traders that you talk to, the capital that you get allocated, like the additional capital you get allocated for trading well, like that's a ton of investment from the firm. And so it doesn't make sense for the firm to make all that investment in all these people that are just not going to make it. So
absolutely,
it really is almost critical that we understand how to get people to year 2 as much as possible. And the people that don't make it to year 2, it's honestly because they can't sit there and say, I'm comfortable with this. They look at trading as, I'm going to make it big, and so I'm going to reinvent the wheel because I need to do something nobody else has ever done, right? No, like just learn something, do it well. And if you do that, if you can develop one trading business, all of a sudden you can develop 2 or 3 or 4 or 5. And that's where all of a sudden you look around the room and you see somebody who's like a titan in trading, right? You walk in and you're like, oh my God, that's like so-and-so. Or like that's the fun part of trading.
Well, look, Jeff, I know people are going to have tons of questions. They're going to want to learn so much more about SMB and about yourself. So where can they learn more about you?
Yeah, you can shoot me an email, jholden@smbcap.com if you have any questions. We're always looking for traders too. So if somebody's interested in joining our firm, shoot me an email, we'll chat.
Perfect. Well, thanks, Jeff.
Hey, thank you.
Brother. Yeah, absolutely.